And here we are again, folks. Another Profit Strategies podcast. I'm Tom Gentile. With me to my right? My right or your right? Chris Johnson's here. Chris, how you doing, buddy?
I'm doing great. It's another week, another week of selling on Wall Street, right?
Yeah, the end of the first week of March. So I want to focus in two areas on this podcast. Obviously, we talk about the markets like we do each and every week. And, I know it's not April 15th yet, but we got to start thinking about taxes. And I started thinking about taxes last night. These are the things that keep me up in the middle of the night. My mind starts dwelling on stuff. And then I just can't get back to sleep. And this last night was taxes. And so we'll talk about taxes because I went on the taxfoundation.org website. Mm-hmm. And I know it was a few months old. I'm a little late to the party, but there's some changes coming. We'll get into that. But let's talk about this week first. So this week, you said, and you said it so eloquently, and we've been talking about it. The sell-off continues.
Yes.
So
yeah. And you look at you're great at with patterns. One of the things I pointed out last week is week 9 for the market is always weak. It's just one of those seasonal trends. When you look at the last 20 years, week 9 of the year, and this one started early because January 1st was on a Friday. So it's technically last week was week 9. This week feels like it again. I am going back to, and I just did a great live stream a little while ago where I was taking some Q&A and everybody asking, well, why aren't we hedging? Why aren't we hedging? Why aren't we hedging? Why aren't we hedging? And there are places where you can hedge on this. This is a healthy correction, Tom, or at least that's what I'm seeing so far. Healthy correction.
Yeah.
And it's hard to really put on a good hedge. You could put a short-term hedge, but the way this market has been with the buy and dippers, you can get buzzsawed on a hedge right now, I think. You really got to be tactical in this market, hand to hand.
Take a look at, first, two comments I want to make right off the bat. Number one, we've been talking about this pullback for a couple of weeks now. You're looking at the money calendar. I will say next week we start seeing green on the screen again. Mm-hmm. So I'm looking forward to that. I'm actually already starting, as of the end of this week, to start adding to bullish positions, trying to get ahead of what I think is going to be the rest of March. I think is going to be, if we flatline or go higher, that's what I'm looking for. I don't think the selling is going to increase, but you never know. We're pattern guys. I'm not 100%. I don't have a guarantee or a crystal ball. I just do things that happen over and over again. That's what I seem to look at.
This market's Achilles heel. What in your opinion, top 2 or 3? What's causing this thing to catch a stride right now and take off and run?
There's several little things that are happening right now, but I would have to say, we're out of earnings season, mm-hmm. and the last bits of earnings really kind of hurt because we got repricing of some things. I saw last week or earlier this week. I saw a lot of commercial real estate getting repriced. And I'm not talking about U.S. manufacturing. I'm talking about offices. I'm talking about medical offices, strip malls, all getting repriced downward. And so that's causing some pain out there. And I think that's reverberating, as well as the big thing is that the bond prices have dropped and continued to trade to the low end, meaning that yields have popped up a bit. And that's really the biggest thing I think that people are underscoring is the likelihood of inflation rearing its ugly head. And where does that fit into the mix with an already weak U.S. dollar?
Yeah, that is, I think that you just nailed it, and I'm with you. Down in Florida, where you are actually, I was just down there a couple months ago in Bradenton along the Riverwalk. It's amazing to see the commercial properties there that have been vacant, medical buildings that are just absolutely vacant. And as you said, they're at the point where they're just they are dropping prices. It's a fire sale right now. In some
Chris, I was out. My wife and I, we love a good bargain. No matter how much money I have or will end up having, I always like a good bargain. And we were at the outlet stores, and we hadn't done that in a long time. It's been a year now. We pretty much stay in. But we went to the outlet stores, First thing I noticed, it was like a dust bowl there. There was nobody there. Couple people wearing masks, but I mean, the other thing is that half the stores are gone, and it's not the chain stores that actually have their rebranded. Let's throw our overstock to the outlets. It's
Right.
the little mom and pop businesses gone.
Right.
The ones that are still there, they're begging you to come inside and look at stuff. We
Hmm.
were looking at some jewelry, and guys, my wife was looking at a necklace. Guy says $5,000. We're looking at it. He goes, "Oh, it's 10,000. I'll give it to you for 5." And it wasn't what she was looking for. Honestly, wasn't what she was looking for. And she says, "No, you know what? I'm not into yellow gold. That's coming back, but not for me." We're walking out the door. The guy goes, 4,100.
Oh,
And my wife was like, "Oh boy." There comes a time where all of a sudden, if you're looking at something of a certain value, and all of a sudden it gets cut in half, and then 4,100 becomes 3,800. We were out the door, and the guy was pricing threes, and my wife was like, "Come on," and she said, "I don't believe those are real diamonds," because he dropped that fast.
you're right.
And so, but that's a different side story. The big thing that I noticed is, I said, "Let's get out of here." And I meant, let's get out of let's go someplace else. And
Right.
she said, "Why?" I said, "I feel sad here. This is sad. These business owners, at no fault of their own." And, and we live in Florida.
Right.
Florida is an open state. It's, we may not be at 100%, but, it's one of the states that we didn't close down. Um, and so, I look at Texas, and I can imagine what some of these other states, what these small businesses are going through. And
Oh,
that's
yeah,
kind of
Ohio.
the understory that, is, I think, eventually going to hit the stock market.
I don't disagree. You know what? I cannot resist when you say things on sale. The guy dropped 18% as you were walking out the door. He barked, his auctioneer threw down an 18% discount. I can't resist the temptation to go and talk about my clean energy stocks now. Because talk about an area of the market that went on sale
Yeah,
and
yeah,
got just evacuated. I mean, it was fire sale. I'm looking at the ICLN right now, which we talked about months and months ago as being that new technology sector, down 30% since its highs just last month,
yeah.
in January. I don't know if you've seen the news, but reported at about 10:15 this morning, Biden administration is going to start up the clean energy loans again. So
Mm.
subsidizing of clean energy is going to be in vogue here, and I think it's part of
Oh
the
yeah.
second 100 days. And a lot of these stocks grabbed a bottom. A lot of people asking, where's the bottom in place on this? And the NASDAQ 100, you nailed it. Interest rates going up, the tail's wagging the dog. The bond market is telling the Fed, watch out. Things are getting hot here. And we're going to see whether Operation Twist is going to come into play as Mr. Powell makes his comments today, on Thursday. But when you think about it, is this turning into something bigger for large cap tech? Is there still a migration that's going? We talk about reopening and opening and looking at restaurants and Carnival Cruise Line and American Airline. Look at
Hmm.
Chewy.com and
Oh,
look at, yeah,
that's one of my wife's stocks. She's been really been hurting on that one. That
look at
and
Home
even
Depot.
Wayfair.
Home
Um,
Depot.
that
Home
are
Depot was,
hitting mid
yeah,
single digit moves every day to the downside.
right. So I think when I look at this market right now, to take it to a market view and from maybe 5,000 feet, not 10,000 feet up, sure, you've got the NASDAQ 100, but I think we all knew that Tesla and everybody else had to give up a little bit because they're just crowded trades.
Yeah,
Now
yeah.
you've got companies like Potbelly who are looking forward and saying these companies that got decimated, who are now just
Hmm.
trading at right at their March levels from 2020, maybe
Yeah.
even February. This is where the opportunities are going to start to open up and talk about a bifurcated market, a two-channel market. This is it. I mean, for
Yeah,
the
and I don't think
traders out there,
I don't think, Chris, on the stock market, it's not going to be like, if you don't get in today, you're going to miss it, because you know what else went
no.
up this week? The
What's
U.S.
that?
dollar. And the U.S.
Hmm.
dollar is now trading very close to the highs that were put in at the end of January.
Yep.
And so, things could be on sale for a little bit longer. So, that's something to be said as well. I'll tell you one area that I think is not going to be at levels for very long. Cryptocurrency. So
Let's
Bitcoin.
go.
Yeah, other than the fact that I have to interject to say, as Biden is opening up the clean energy loans again. Did you see the price of USO today?
I did.
It went up too.
Yep.
It's like, don't wait for us. The dirty energy guys. Wait for us, guys. It was up too. But take a look at Bitcoin. Take a look at GBTC. The only one that and I talked about it last week that was way overheated up and needed to drop hard was Riot Blockchain. Yep. And Riot came right back down into the areas that we expected it to be in. But I will say this: if Bitcoin goes up and it hits those, it flirted with 53 earlier in the week. If it gets above that, gets back up into the 55s, 58s, makes new highs, expect Riot Blockchain to be on fire again. And that could become another one of those overheated areas as well. It's something that if Bitcoin goes up by a factor, if Bitcoin goes up, Riot's going up by at least a factor of 2, if not more, and down.
I did a correlation study on the two of those last week just to kind of get an idea, because everybody's asking about Riot Blockchain. And I got to add a little bit of props for you. You said $40, and boy, it just tapped $40 and then took off again. But that was a great call on your behalf.
Well, thank you.
There is a 97% correlation between Bitcoin and Riot Blockchain right now. It is running high. It is seen as the derivative. If you want to play an equity to get in, it is right now attached at the hip with Bitcoin. So yeah, keep an eye on that. And that's 67. We talk about 50 to 55,000 on Bitcoin. I did a Fibonacci analysis of it, and that's actually between the 50% and the 62% retracement, the 61.8. So that's that zone where it's got to be battled out. And once you clear that, open up the gates.
And I'll mention something else too. Goldman Sachs is jumping into the live trading desk.
Yep.
They're going to be live trading desk because they're adding cryptocurrencies, and that means that they're going to be able to open that up for all of their groups, and that would be those 1%ers, foundations. Yeah. The richest of the richest are going to have access to Goldman Sachs. And this is a company that's trading. 1.7 trillion it has under management. Yeah. So imagine what's going to happen then. And then, of course, once they get into the game, others are going to follow. Wall Street is really embracing Bitcoin and cryptocurrency. There are several other cryptos. A lot of people say, I can't. Bitcoin's so high. I can't pay $50,000 for a coin. I don't have $50,000. You don't need it. The reason why is because it's fractionalized. You can actually put as much as you want or as little as you want into the coin. And there are other smaller coins that have a 5x, 10x, even 20x factor to Bitcoin that are out there as well. So,
well, it is quite the buzz. Everybody is all over it. It's one of the hot things.
2 weeks ago, all-time high. Last week, big monster pullback as we went from 58,000 down to around 43, and then boom, we're back up above 50 again. And now the guns are looking at. And if I look at the longer-term chart, you don't even have to look at a long-term chart. Just look at a 30-day chart, and you can just see that the next area on the horizon, based on the pullback we saw, if you take that. Let's call it a $15,000 pullback, and you add that 15,000 to 58, that puts you up into the 70s as the next area of, we're going to call it a Fibonacci extension.
There you go.
Extends that up into the low 70s. That's huge.
Oh, again, the buzz, and I'm going to use that buzzword to steer it towards one of the subjects we've talked about a little bit. How about Reddit and the hot stocks now?
Hey, you know what, Chris, and this is for all of our podcasters. Okay, those of you that have podcasts, I'm probably going to end up doing a video on it because my son came out to me as I'm talking about, boy, I would love to be able to I'm a data guy. I know you are too.
Right.
Love to be able to take all the sentiment from Wall Street Bets and be able to calculate who's talking about what and whether it's positive or negative. Well, somebody's already done it. So there's a website out there called Swaggy Stocks. Swaggystocks.com. Check it out, guys. You'll definitely love this if you want to see where the Reddit crowd is as a whole. I'm looking at it right now on my phone, and hey, you know what? We can't share screens on a podcast, but I can show that. See that, guys? There's Swaggy Stocks, and what it does is it shows you, as I'm looking at it right now, it's showing me where everyone is. And then it shows me, like right now, the number one stock that's being talked about as of this podcast. Well, we're back on GameStop again, believe it or not. And Rocket Mortgage is second, with Peloton taking the bronze medal in terms of the amount of attention, both positive. Now, all three of these have much more positive than negative, because the Wall Street Bets crowd. They're a long crowd. They like to buy stock. They like to buy expensive calls. I don't hear any of them talking about selling puts. And I like to do what people are not doing, because this is this might be a game to them. To the moon, hit the suits.
Diamond hands.
The suits got a bee sting a couple of weeks ago. Melvin Capital got more than a bee sting, but the suits in general got a bee sting. You know what they do with a bee sting? They end up swatting the bee.
Yep.
And so I can tell you one of the reasons why the Reddit crowd went from a couple 100,000 last year to now 9 million people following them is because of a lot of the mainstream media attention. And guess who's in there watching them now? The hedge funds. Hedge funds are now more calculating, and they're now saying, all right, let's get some ideas on what these folks are doing, because they're pushing stocks to extremes, and there are opportunities out there that hedge funds are taking advantage of, and they're using companies like Swaggy Stocks to help them correlate the data. And you and I can too.
Oh, yeah. You know what? On that same note, today, first day of trading for ticker symbol BUZZ. That is a Van Eck social sentiment ETF, Tom.
Wow.
And you mentioned
doesn't trade options though, but yeah.
No, but you mentioned Bee Sting. One of the guys behind this is Dave Portnoy, who is the CEO of Barstool Sports, and he is a three-time Bee Sting survivor, according to his bio, which I think is funny. This guy has been on the edge of a lot of things, and I love what he's done with Barstool Sports, hooking up with Penn National and socializing gaming.
The Barstool Fund has brought millions of dollars in.
It's amazing.
These restaurants.
Yeah, and it's Van Eck actually approached him and said, we want to launch this. We've been watching sentiment for years, but this is the time to do it. And they literally have, if you haven't seen it, you can look it up on Twitter and all kinds of places. Dave Portnoy doing the press conference, and it is a complete rip of Reddit. But I'm interested to see how this does, because they're only rebalancing it once a month, 75 stocks, over $5 billion in market cap. It seems like it's a little slow moving. If you're really trying to pick up the Reddit crowd and trade on them, you can't rebalance once a month. These guys are in and out, or the move is done in 3 days. Look at Rocket. I mean, up and
all
back.
Right. So Chris, so you and I both kind of, let's wrap this part of this segment up. You and I both kind of think that we're going to see an end of the pullbacks, that by the end of March, we will be flat, if not higher.
Yep.
And, and we're looking at clean and dirty energy. And there's a couple of other things that I have. I'm looking at, obviously, Bitcoin and cryptocurrency. I expect that to be higher as well. But I started off the podcast talking to you about me having a sleepless night last night. Mm-hmm. So it all started yesterday when I got a letter from the IRS. Now, when you get a letter from the IRS, Chris, are you excited and happy to open it? Or is there a little bit of fear and the hair in the back of your neck standing up thinking, all right, what did I forget to do this time?
I usually gauge it by how thick the letter is, Tom.
Yeah.
They don't send thin letters, and for some reason they send a lot of pages that are blank.
So I open it up real quick, I peek at it, and then the first thing I see is this is not a bill. And immediately, okay, let me see what this is about. Then I send it to my CPA, and I go, is there anything we need to do? He says, nope, we got it covered. Then that started making me think about the IRS and start thinking about taxes in general and start thinking about the new administration, which is in place. I start thinking about the pandemic and all the money we're giving out. We've got the Paycheck Protection Plan, which started last year. We got potentially another $1,400 going out to everybody this time around. A little less people now than last year receiving it. PPP is starting again. So they're going to do that for small businesses. I think they should have done that in the first place. They should not have given these PPP loans out to large companies. But you know what? That's in the rearview mirror. Another mistake that was made. Chris, all this free money, it's got to be paid for. The check is coming. The check is coming. I'm 55. Is it going to affect me? Yeah, it's going to affect me. But you know who it's really going to affect? My kids, right? The ones who got to be really concerned about this are the millennials, the ones that survived the 2008 financial crisis. And after years of finally getting to the point where they are out of the job and they're in the career and they're advancing themselves, now these millennials got to be thinking, am I going to get this bill? Because there's only two ways that I know of that after spending trillions, and we're probably around 6 trillion right now, when you take a look at all the money that's gone out for COVID, got another 1.9 coming.
Another 2
US
for
debt clock
the
U.S. debt clock is spinning so fast, it's absolutely insane. We're coming due. Somebody's going to have to pay for it. And the only way that the government handles these things is by debt financing or by raising taxes. And you cannot finance debt with this kind of large number we're talking about here. So there's stuff being talked around. There's a lot of stuff being talked out there. Elizabeth Warren's wealth tax is being discussed. There is some crazy, crazy stuff being discussed. I thought, what I did was I went to the Biden tax plan, which is out there. Everybody can see it. It's at taxfoundation.org. You just got to go and search Biden tax plan. You'll bring it up. It's a couple months old, but it outlines some proposals that President Biden has. And then you've got all the crazy proposals that are out there that a lot of the liberals are suggesting. Listen, let me just say this right off the bat. I pay a lot of taxes, and I am happy to pay taxes. And if my tax rate's going back up from the 37 to 39.6 or whatever it is, it's that reversion, which is going to happen. That's a minimum of what's going to happen. I'm fine with that. That really doesn't change much for me or anyone else. But when you start telling me that my capital gains tax is going to get tied to my income, first of all, why does it, you're taking away to me and a lot of other folks out there the idea to invest and be able to grab a capital gain and be able to enjoy the benefits of betting on or investing in small or large businesses. Yep. That's just my point. You know what I mean? And what I'm talking about is right now it's what, 20, 25%, somewhere between 20 and 25%. And then, to go to the top tier, to go to a 39, 40%, all of a sudden you make it like an income. Well, why don't I just cash in all my stocks before that happens? And if I'm not the only one thinking about this, is that going to cause a run on Wall Street? Those are some things that are going through my mind right now. How about you? What are you thinking as, I opened the can of worms here for the last 5 minutes.
Two sides. Actually, 2 or 3 sides. First of all, one of the big things that your tax advisor, most people's tax advisors that trade the markets will start telling you is about the difference between capital gains and your short term, long and short, right? Yeah. Short-term capital gains are already taxed at that rate. I mean, that is
exactly.
Not.
So, as traders, you know what? As a trader, and I trade, I know that going in. Right. But as an investor on the other side, I got to think a couple of things. Do I take profits and pay the smaller tax now before the potential increase comes down the road, or do the exact opposite and never sell,
Well, they're also
thereby
talking about
putting it on somebody else when
right.
I'm gone.
And at some point, though, when they're changing all the step up rules and all of that, then that goes away. I think one of the things that's a weird little could happen, a derivative of this, is exactly what everybody's a little concerned about. The people don't like the way that we're seeing an increase. People are day trading. People are increasing the volume and the frequency of their trades. The retail investor is. And the government looks at this and says, well, it adds volatility to the market, and it does. In my opinion, it also makes for a better marketplace because you have more people involved in it. But at the
more
same
liquidity,
time,
more volume, more efficiency.
exactly.
Yes,
It's all good. But you are now starting to feed that same side of the that you're arguing against by telling people, well, you're going to get taxed the same whether you hold it for a year or longer or whether you hold it for a week. So
right.
I think this is it's kind of a mixed message that you're seeing sent. The other side is I do worry about what the people who have been holding on to shares of Tesla for the last 10 years who have mega gains are going to do, because you're right. People will look to say, all right, I'm going to trade this, I'm going to sell it just to shut down that cost basis, take the lower tax hit. I wonder if there's some way that they're going to grandfather some sort of, if you've held something for so long, maybe extend even the capital gains out to 3 years or 5 years, something like that. Go beyond.
Yeah, or if they phase it in, or they hit a sweet spot, which is maybe 25, right. 28%.
But
people, I don't think people will be that concerned about it. But if you jump to, treating it as ordinary income, that's going to be a shock to the system. Yeah. So, Chris, as we end this week, what are you seeing happening into next week, into the rest of March, and what are you looking at?
I think we're looking at the last 2 weeks, week 9 and week 10, are that little purge or that selling pressure that we needed to get out of the way. Watch the small cap. You know what, Tom? Just to glean on that inflation, look at the difference between the Russell 2000 value, the IWN as in Nancy, and the IWO, or you can look at the IWM. Growth has been hit. Value hit a new high earlier this week, even though interest rates are going up. That's a sign that this is still going to be a little bit of trade-off for large cap tech and some of those growth areas. But I think the market starts to climb its way out of this little 2-week hole.
All right. And I'll just end by saying this. I still think we see a lot more upside in both Bitcoin and Ethereum. I added to Ethereum position myself last week. And I do see more and more institutions are getting involved in this. You're going to hear more news about this coming out, and I think it's going to further bolster these new moves. I've got 72,000 as my next target. Obviously, we got to break above 58. We get above 58, and that's what I'm seeing as a Fibonacci extension. Takes us up to 72,000 for Bitcoin and puts us. We were already at the 2,000 level. We're very close to it for Ethereum, and I see Ethereum up around 2,400 if those numbers do stand to be correct. So that's it, Chris, and that's it for all of you who are at home or abroad or wherever you're watching or listening to us. I want to thank you again for being a Profit Strategies podcast listener, viewer, and we'll see you again next week. Take care. Bye now.
See you, Tom.